Hi, and welcome to this episode of Financial Planning Innovation. My name is Marc Glickman. I'm an actuary and a long-term care expert, and it's my pleasure to have on the line Phil Graham today. Phil Graham is an expert in a specific insurance strategy we're going to talk about with regard to getting beneficiaries liquidity, and he's the chief sales officer for a company called the Alternative Group. Thanks for joining us today.
Hey, thanks, Mark. Thank you for having me.
Okay, so tell me a little bit about your background, first of all. How did you get into this space where you found this, you've identified this problem with financial advisors that you're looking to solve?
Well, I spent over 20 years at a large marketing organization that we were doing tons of index annuities. We owned an RIA, owned a broker-dealer. And then almost 3 years ago, I sold out of that company. And I felt like there had to be a way that someone like myself could still provide value to a financial advisor without disturbing or disrupting their current relationships. So without asking them to change their current IMO, FMO, without asking them to change their RIA or their broker dealer, and still provide value to the advisor, but also to the end consumer as well. And that's what we figured out.
Okay, I love that idea. And in fact, I love it so much that my business buddy INS, we do the same thing for long-term care. So it's great to be able to work with any advisor out there and help their clients, right?
Absolutely. It was definitely a game changer to be able to work with advisors with every IMO and organization out there without them having to divorce their current relationship in order to do business with us.
Awesome. Okay, so tell us a little bit at first about this solution that you created. What was the problem that you were noticing in the marketplace?
Well, I was doing a lot of research, after the DOL and everything kind of happened, and was trying to figure out what a real threat to an advisor's business might be. And through that research, I actually found what started as a great opportunity, and that's that $68 trillion is going to be transferring hands over the next 25 years. Kind of all the baby boomers we've been planning with over the last 20 years are starting to phase out and pass away. So on the surface, looks like a tremendous opportunity. But the risk and the threat that I saw time and time again, statistically, 66% of beneficiaries fire their parents' advisor immediately upon inheriting wealth. So it turned an opportunity into a possible threat to an advisor's business.
Right. And I know I wasn't aware of this problem either. A lot of advisors know about life insurance. They don't realize that you might not actually have access to the funds right away. Tell us a little bit about that situation.
Well, when someone passes away, there's typically an immediate need for money. And all the insurance companies out there are doing an amazing job trying to help these families, trying to get them access to money. But the reality of it is, none of that money is going to be available without a death certificate. And if you go to askafuneraldirector.com, that is an actual real website, the national average is 10 business days to get a certified copy of a death certificate. Last week, I went to the Texas Public Health website, and Texas is posting a 20 to 25-day processing time for doing it on the website, and over a 60-day processing time if you're doing it through the mail. So even though 10 business days is the national average, we don't know exactly what that time is going to be. And the fact of the matter is families are going to need access to money.
Right. So what happens during this time period that might be 10 days up to a month where they don't actually have money? What are they missing out on?
Well, typically somebody's having to come out of pocket. And the example I love to use is Prince. Prince died with a $300 million net worth. Now, I realize you and I could have a whole separate conversation about his non-existent estate plan. But for this conversation, let's focus on the fact that Prince's family is inheriting $300 million. And the question I ask everybody, Mark, is, do you know who paid for Prince's funeral?
Who paid for it?
The actor and comedian George Lopez gave Prince's family $20,000 to bury him and cover their travel expenses because they couldn't get to any of the money.
Wow.
Now, I believe this happens every day in America, except for being Prince and George Lopez is typically one of your clients and one of the beneficiaries is deemed more successful. They get stuck paying all the bills. They never get reimbursed. And now Thanksgiving's awkward.
Right.
And ironically, most financial advisors, they are that successful person in the family. So as I'm having these conversations, a lot of advisors are raising their hand and going, yeah, that was me when my aunt died. None of my uncles paid for anything and I paid for it all. So the stories we hear are time and time again, very similar.
Right. And this is why I love interviewing experts like yourself, the practical realities, of kind of navigating the system and working with the insurance companies and activating the claims and all of this. when it comes down to it, we can make that experience much better. So what solution did you kind of develop to solve this problem where there's this gap in terms of the beneficiary getting this liquidity?
So the beneficiary liquidity plan is something that we use. We use assets that the client has already earmarked for inheritance. So they don't make any premium payments, which they absolutely love, by the way. We're not leaving any more money, and we're not leaving any less money to the family. So literally, whether they do this or not, the family is going to get the exact same amount of money. All we're doing is working with the client to help them predetermine how much money do they think their family is going to need for that first 30, 45, 60 days until the estate is settled properly. This isn't about overfunding it. It's not about dumping as much money as we can. It's about putting just enough in to get the family through, using money that the family is going to inherit anyways. We use a single premium guaranteed issue fixed whole life policy that's structured properly, that does not require a death certificate except from the states of Kentucky, Indiana, Louisiana, and Massachusetts. Those states require a death certificate. Every other state, the beneficiaries are receiving their money in 24 to 48 hours after the insured passes away.
That's so cool. And what would you say is the average size of the life insurance policies? They probably aren't big policies, right?
No, $25,000 is really our average. And that's coming from the numbers of about $15,000 to cover a funeral and another $10,000 to cover ancillary expenses like travel, airline tickets, hotels, celebration of life, and other bills the family may have. And if someone's going to get cremated, that policy size will go down. But the great news is that they don't have to have any of their funeral plans arranged. They don't have to have a funeral home picked out. This is just them simply earmarking the money that they ultimately want their family to use for this need.
So these are actually very affordable types of policies. And again, they're going to solve a need that's going to be much more important when you see that point of claim situation come up.
And because it's life insurance, it grows tax deferred and passes tax free. We tell people it's similar to a savings account at the bank. This is not to leverage your money. This is not to get some huge rate of return. This is all about creating liquidity and making it easy for your family on one of the most difficult days of your life, or their life, the day you pass away. And for the advisor, 90% of our business, Mark, comes from annual reviews. So we're not asking them to go out and do proactive marketing. They're seeing these clients anyways. All we want them to do is ask one very simple question, and we have the process buttoned up to a T, because like you said earlier, this is all we do all day, every day. We're the experts in this field, and we show them how to implement this without disturbing or disrupting their normal business process. We monetize their annual reviews, but the real reason they do this, and we show them this in our training platform, is we help them build a bridge to that next generation. We want them to be the hero. And everybody admits they don't have a great relationship with the beneficiaries. Here's a way you're compensated for putting the plan in place. We pay you to build that bridge. Right. You make a little bit of money with me, but the big payday is when you keep those assets under management to the next generation. We show them exactly how to do that.
Right. It's cool that you came up with this innovation, and I really appreciate you joining us on the show today to share it. I'm sure we'll have you on future episodes as well.
Thank you, Mark. I really appreciate it.